Okay, welcome back here to round out the first hour of the weekend edition of the Korelin Economics Report. The majority of these segments in this particular first hour came from the Hard Asset Conference in New York City. Really having a good time here. Going to have a couple of segments coming in the next hour that will originate in Washington, D.C. Little blonde lady and I are going to go down there. We're going to visit with Ron Paul. We're going to visit with Jeff Deist and just generally have a good time, talk politics down there, hopefully with the congressman. Okay, John Kaiser is with me right now. John is a member of our industry who I have a lot of respect for. Why do I have a lot of respect for him? Number one, because he's very knowledgeable, okay? Started out as an analyst in Vancouver. John has a great newsletter, the Kaiser Bottom Fishing Report. Let me tell you a couple things about that. John takes no fees from any of the companies that he writes up. I know I'm correct on that. That is something that is, I don't want to say it's rare in the industry, but I want to say that there are some who do and don't disclose it. John isn't one of them. None of those guys are on our site, by the way. John, you're also, in addition to knowing the resource sector companies very, very well, in terms of macroeconomic issues, precious metal issues, you're also very, very good in that particular segment. What I want to talk about right now, and this is a fairly time-sensitive question, but we have a situation in Europe right now that is dramatically affecting, I think, the resource sector. The reason I think it's affecting the resource sector, obviously I'm talking about Greece, followed very closely by Portugal, Spain, Italy, etc. The reason I think it's affecting the resource sector is I think the trepidation that's going on in Europe is causing people to turn to what I call the best of the worst, and that's the US dollar as opposed to precious metals. I think that's a misdirection. What does John Kaiser say?
Well, I'm looking at the equities in the resource sector. I'm looking at the metal prices, which have only fallen modestly, both precious and base metals. But the equities are predicting a substantial global slowdown, which of course implies lower metal prices. And it's linked to concerns about Europe. It's linked to concerns that China's slowdown in the middle of a major leadership campaign, which is one of the most turbulent since Tiananmen Square, could cause China to develop problems that it may not pull itself out from. So there is an anxiety out there that, at least in terms of raw material demand, it's going down in the next couple of years, and that's very poor for metal prices and very poor for equities involved in developing advanced projects.
Well, here's an interesting comment. That question was basically given to me on BNN last night. Market Close, I think, was the show that I was on. And I indicated to the fellow who hosts the program that I was fairly optimistic, for example, about copper. Okay, and we talked about a little copper company that I'm not invested in, a little company called Copper Mountain, Canadian producer. Okay, and I said, I've got an interest in this particular company, not a financial interest, but I just have a real interest in the company. And he said, why? And I said, well, their cost of production, all in, not just cost of production, total cost, including admin, et cetera, was, probably something under $1 under the price of copper right now. Well, to me, from a fundamental standpoint, an investment like that would make some sense. And he said, with all the economic turmoil that's going on, and he pointed specifically to China, he said, I think you're nuts. And I said, well, I beg to differ with you. I said, the one thing about China right now is, yeah, they're not growing as fast as they were, but the latest numbers that came out were a little over 8%. What's wrong with that?
Yeah, the reason the markets are selling off is, they're down because there's a general movement out of equities in the resource sector, but there's also the anticipation that, metal prices haven't gone down yet equities have started going down. Yeah. So what happens when the metal prices start going down? What happens when the big equities on the senior boards in the non-resource sector start going down? So there is this dread there that things are already deteriorating, but what if they really start deteriorating in the broader sector? How much lower? So we're having this anticipatory massive decline in the resource sector, which I frankly think is unjustified. But that's just me.
You know what? That's two of us. I agree 100%. I think it's totally unjustified. You look at economic conditions around the world, and this is one of the this is one of the main subjects that we talk about on the show, Jonathan, and that I talk about whenever I do guest appearances on other shows. goes, how can anybody in their right mind not realize what's going on economically around the world? And what is the proven, thousands of years proven fallback been? It's been precious metals.
Well, Americans would beg to differ. They have got $8 trillion parked in bank savings deposits, earning anywhere from 0 to maybe 1.5%.
And they're crazy.
No, they're smart because they figure if the world is going down, America is the last boat to sink, and they want to be on the sturdiest Titanic rather than the little ones that go down first.
The little ones are going to go down first, but I have to tell you, you look at the debt of this country, you look at the total lack of anything material behind the U.S. dollar, you look at the turmoil that's going on politically in this country, you've got two factions, okay, two major factions, obviously, Republicans and Democrats. They don't even talk to each other a lot of the time. I mean, I think the United States is a powder keg waiting to explode.
I would disagree with you on that. I'm thinking that it's time for, if you're a speculator who wants their foot in the resource sector, forget about these advanced projects that are trying to prove that their deposit is going to go into production.
Can I interrupt you just for a second? A man after my own heart.
So, start looking at a segment of the development cycle that has been ignored since 1997 when the Bre-X betrayal caused a monster gold deposit to just plain evaporate.
Right.
In this kind of climate where people are dreading lower metal prices, they don't want to be in these advanced stocks, yet they still want to make money for the resource sector. So why not look at discovery exploration type stocks, the kind that prevailed before 2003, when you could buy some 40-cent stock that might go to $40. Advanced companies don't do that. They're just speculations about the future price of the metal, and right now the gloomy outlook on everything is that those prices are going to go lower. So you're kind of insane to want to plow your money into resource stocks until there is clear evidence that America is indeed coming out of its trough, that Europe is solving its problems, and that China is going to go back in an uptrend. And I'm not sure how long that's going to take. So right now I'm looking for companies that are going to make a big discovery that's rich, where it doesn't matter if gold's down 50% tomorrow, because it's all about how big and rich this new discovery is, and it's all about drilling. Where does the deposit go? That's what's going to, I think, make a comeback. It's going to make these conferences much more exciting. Right now we have to listen to all this drivel about macroeconomic predictions and ideological nonsense.
Good
and
for
I
you,
think
John.
People are sick and tired of this stuff.
Sure.
They want to make money by betting on a drill target that delivers an intersection and then grows and grows and grows. That used to be the buzz at these conferences. That's where we used to have a lot of fun. That's where we newsletter writers used to be relevant, because who cares what John Kaiser thinks about macroeconomics or ideology? They want to know, what has he heard there with his connections amongst all the geos and that, and with this experience he has seeing when they're lying, when they're actually trying to make it look bad because they're secretly buying it and all that. This is what readers out there want to hear about.
I haven't seen this guy this fired up for a long, long time. Let me tell you, he's got every reason in the world to be fired up right now. I could not agree more. We may not share the same views regarding the economic outlook for the world, but who cares? Am I right? I don't know. Is John right? I don't know. It doesn't matter. You want to get as many opinions as you can, and then you make your own decision. But what John is saying about investing in the exploration stage companies, early development stage companies, that's exactly what I said in my presentation this morning. Why? Because that's where the leverage is. It's the best place to be. You just have to be damn careful of the companies you invest in. Okay, how do you separate the wheat from the chaff? The Kaiser bottom fishing report, among others. Tell us about it.
Well, Kaiser Research Online covers 1,800 companies involved in the resource sector, from producers to the exploration companies. It's got a search engine. It's got my recommendations on it. Sign up $100 trial for the first month, gives you a sense of what's going on, and that'll be your key to becoming either a ounces and pounds in the ground speculator, or old-fashioned discovery speculation?
Purely and simply, that is a segment that you need to look at, in my opinion. Don't take all my advice. Listen, again, I don't purport to be the prettiest baby in the nursery. I'm just a guy who fortunately gets a lot of people together who I think are valuable to our audience. And let me close out this hour by saying, in all sincerity, this guy, John Kaiser, is one of the most valuable people to our audience, and I appreciate him taking time to come on our program. Stick around, Big Al's going to be right back for the second hour.
Thank you, Al.